Hello, hello. Another week is behind us, and this was a green week. So if you're here, you're probably interested in summarizing the whole week, looking at all the headlines, talking about what is going to happen in the week ahead. Are you ready for it? Let's go. Hello and welcome back to the channel. I'm Micha Stocks from the channel Stock Talk with Micha Stocks, where we talk about the market. We talk about everything that is interesting in the stock market, and we're going to start by summarizing the major averages. And before we continue, if you enjoy anything that you saw here, you can smash that like button. That will expose the channel to more people. And of course, if you haven't subscribed yet, this would be a great opportunity to subscribe and to turn notifications to on. This is how the major averages ended the week. In the last 5 days, the Dow Jones ended on a green side, plus 0.85. S&P 500, the 500 best and biggest companies in the world, 0.9. NASDAQ, 1.3. And the Russell, almost 1%. When we look year to date, we can see the last few days helped us to gain momentum back and turn Dow Jones back to the green side, up almost 1% from the beginning of the year. S&P 500 5.8, the NASDAQ 12.5, and the Russell 10% on the green side. When we look at the crypto market between March 2nd and March 3rd, there was a huge liquidation, and you can see the drop on all the different coins between Bitcoin, ETH, and all the others. And you can see that on the week, Bitcoin is down almost 5%, ETH is down 4.2%. Year to date, they're still up 30 to 34.5%. When we dive into the different sectors, we can see that the best performing sector were the materials. The XLB up 4.2%, then industrial, energy, technology. Worst performers were utilities and consumer staples, which are considered more on the defensive side of things. And when you look at their charts, you can see that most averages or most indices actually work or move together. The only one that dropped very rapid was the utilities. You can see it here, but gained momentum to the close on Friday and ended only minus 0.5. On Tuesday, it was actually from beginning of the week minus 4%. Very interesting. And when we even go deeper in the industries themselves, we can see that metals and mining ended up plus 9.8%. And from the beginning of the year, they're up 18.6%. Solar, we're going to talk about later, ended plus 7.3, which is almost all the gains this year. Then oil services, gold miners, etc. And the worst performers were actually the regional banks. Let's continue to the commodities themselves. The natural gas, after touching briefly 1.95, ended at $3 and when is up 17% for the week and 30% for a week and a half. Huge gain in natural gas. The biggest problem from the inflation front is the gasoline, up 16.4%. Usually it impacts with a lag, but this will impact. And also crude oil has closed trading at around 79.8, which is almost 80, a very high reading for that. This is our heat map. We can see most stocks, of course, on the green side on the S&P 500, except healthcare. We see Eli Lilly, Johnson & Johnson, Merck, Pfizer, United Health, and Costco that reported earnings during the week. Let's dive into the headlines. We had Fed officials, Fed Bostic, talking about slow and steady on dealing with the inflation and rate hikes. We heard also Waller saying that the Fed may need to raise rates to around 5.1 to 5.4. The market is already incorporating that and pricing it in, but there are still voices that are saying we should see a crash. We'll talk about them with the other headlines. These are the major headlines that, of course, Bostic and Waller, both Fed officials, came out this week. And I would say that to summarize everything, they're waiting for the data coming out in the next 2 weeks. Job openings, job reports, and CPI. We're going to talk about that at the end of the video. These are the companies that reported this week. We heard about the consumer, which is preparing itself for a recession. We heard that from Costco, Best Buy, and others. We heard Salesforce, Snowflake, and C3 AI talking about their customer, which are enterprises that actually started seeing a bit of optimism in the way they're planning their year. So that was very interesting. And of course, we heard very anecdotal comments that we're going to talk about during this video, like Fisker, Rivian, and others. But this headline wasn't dealt, at least from my perspective, in the severity that it is. And I'm not talking about the impacts of COVID. I'm talking about the fact that the Energy Department, an official U.S. agency, came out and said that they see a probability. They said a low probability, but at least they admitted that there was some kind of probability that the lab leak was the origin. Now, I'm not going to dive into COVID yes, COVID no. All I'm going to say is that China and the U.S. right now, the situation between both countries is only escalating. It might not be escalating yet to a military conflict, but it is escalating. It is escalating to a point where the Chinese party actually is reaching out to Elon Musk saying, don't retweet and talk about the COVID origin. It's escalating to a point where even the European Parliament decides to ban TikTok, which is a Chinese entity, and there is the notion that the Chinese are following everything that's going on in TikTok, in the Western TikTok. It comes to a point where Xi Jinping, the president, the lifetime president of China, during this weekend is nominating new officials to his government, which are mainly party officials, and they might not have the right credentials for what they're doing. Before Baidu, there's a lot of mistrust right now between Wall Street and anything that Xi Jinping does, who is the president of China, and that creates a lot of volatility and risk when investing in Chinese companies. It came to a point where JP Morgan actually changed the weighting and lowered the weighting on China. Even if we take it a step forward, we can see Chinese companies, I'm not even talking about the West, like Foxconn and Gore-Tex, both taking manufacturing outside of China into India and not keeping it in China. Now, what does it mean for us as investors? First of all, we can look at Baidu and say, look, Baidu is keep on doing what they're doing, and they're going to launch Ernie, which is their ChatGPT version, March 16. So from a stock picking perspective, maybe we don't care. But from a macro perspective, even on a stock picking perspective, there is impact. China understands that impact, and March 1st, they even said that they got the best manufacturing activity. They sent out the report. And of course, we all know that reports coming out of China, we need to take them with a grain of salt. But the stock market, the Hong Kong stock market, loved it, and it went up 4%. What does it mean for us as investors? One, remember that anything you see here is only my opinion. It is not financial advice. I think that we need to be cognizant of the fact that there is tension between China, US, and Europe. China's, China's discussion with Russia isn't helping that situation. Does that mean that China is not investable? Anyone needs to decide. I think that these tensions, if they keep growing, they might escalate to a point where it will be very, very bad for the stock market as a whole. Are we at that point now? I don't think so, but we're getting closer to that. How close? We will see in the next few weeks. It was important because there were a lot of pieces of information and headlines related to that. Let's continue to other things. Rivian, on their quarterly reports, downgraded the amount of vehicles that they're going to produce. They said instead of 62,000 that the street expected, they're going to produce in 2023 only 50,000 vehicles. Remember, Rivian is a company that already produces, that already sells, that already delivers cars, and they're having a challenge surpassing 50%. By the way, during the end of the week, around Friday, they had an all hands, and they said that they're internal goal should be 62 or 65,000. And that's why the stock behaved the way it did on Friday, which went up on 8% and high volume. But during the week, they weren't that optimistic. Binance used $1.8 billion of customer fund to their own purposes. Again, we're seeing the same thing in crypto, and that's why regulation is super important. Novavax, during their earnings, hid at the last line of their earnings report, a line that's saying that if they don't sign enough deals, they're probably going to go out of business. And that, of course, created the drop in the stock, which went down 25% a few minutes afterwards. Eli Lilly cuts insulin price by 70% and caps the price to $35 per month, which is very dramatic. If you need it, this comes after a lot of heat coming from the capital and maybe even the fake account that was created under their name in Twitter saying that they're giving insulin for free. Amazon pauses their construction of headquarter number 2 in Virginia. They currently have a huge headquarter in Seattle, Washington. They want another headquarter in Virginia, and they're pausing. They're looking at all the expenses. This is part of it, or all their investments. Going back to Rivian, that said they're going to have a challenge going over 50,000. Fisker, at the beginning of the week, ticker FSR, came out and said, we're going to deliver 40,000 cars in 2023. Sounds very optimistic. There's just one small problem. They haven't delivered even one car yet, but they still believe that they're going to get to 40,000. And only time will tell. I'm recording this March 4th. No car was delivered yet. We'll come back to this headline at the end of the year. Morgan Stanley's Mike Wilson keeps knocking on the table and saying, guys, March isn't going to be a positive month. We are going back to the bear market. Leon Cooperman, the billionaire, also says the same thing, that the S&P will plunge 22% and he's afraid of the recession. To Mike Wilson, we have JP Morgan and Morgan Stanley jumping on the same wagon, and Marko Kolanovic saying the same thing. There's a disconnect between higher bond yields and equity multiples, meaning that companies right now are valued too expensive. They need to go down. Go down meaning the stock price needs to go down. What is the right... we're going to talk about the charts at the end of it. What's the right way to go forward? I have no idea. We're going to talk about charts at the end. And solar. Yeah, back to the news. So First Solar had reports this week. They had a very, very solid report that gave steam to all the solar stocks. We can see First Solar for the week up 28%. Enphase up 5.6%. SunPower up 5.59%. And SolarEdge up 5.8%. What else happened this week? Google cuts 137 jobs in a second round of layoffs this year in Waymo. Waymo is their full self-driving software. Very interesting. Bridgewater. Ray Dalio isn't in Bridgewater anymore. He's still, of course, the owner, but he's not actively managing it. He's laying off around 8% of their employees. Bridgewater had a very, very stellar 2022, and right now they're downsizing in order to increase their earnings. And Tesla, March 1st, had their Investor Day. And the Investor Day, let's say the following. Everyone got what they're looking for, and no one got what they were looking for. Meaning that if you were looking long-term, 3, 5, 7 years, you probably got the most detailed plan you expected. If you were looking for a short-term plan, you didn't get anything. But you saw the amount of managers at Tesla. You saw 15 or 16 different managers. And if there was a question of succession around Elon Musk, you were now introduced to new players at Tesla. They're all veterans in Tesla, but still new players. After that, the day after, the stock fell over 5% because investors were kind of... on the fence, deciding if it was a good investor day or not. But of course, the day after, there were these details of February China wholesale units, which beat the estimates. The estimates was around 64,000. It was 74,000. Then the stock went back to exactly where it was before that. Also, on the Tesla Investor Day, they talked about lower cost, mainly focusing on how to scale in a dramatic way. They said if we want to scale in a dramatic way, we need to reduce our investment, we need to reduce our cost. And the plan they laid out was exactly that. They also introduced Gigafactory Mexico, which is going to produce the next generation platform, probably a smaller footprint for emerging markets, maybe even the US, I don't know. Part of the reason why it's in Mexico is a low-cost labor, and maybe because it's easier to get from Mexico to emerging markets, whether it's South America or other locations. Very interesting development. And again, if you were shorting Tesla, you probably got 24 hours of a declining stock. If you're long Tesla as an investor, you probably saw you heard the presentation and you thought to yourself, wow, all the other car companies are 4 or 5 years behind of Tesla. But again, everyone got their own opinion around Tesla. Also this week, Tesla produced for the first time in Berlin, 4,000 cars a week. Do the math. That's what ramp looks like. And on Friday or Saturday, we got a recall. 3,400 of Model Ys in the US are recalled. This is not over the air. They need to come to the shop because there were loose bolts in the back seat or something like that. Salesforce jumped 16% after beating expectations. Mark Benioff was under a lot of pressure. There are 5 activist groups luring around the company and pushing Mark Benioff to change the way he manages Salesforce to be more focused on expenses, more focused on investment, and less family, more, let's call it, company orientation. It got to a point where Mark Benioff actually mentioned Elon Musk. He says to The Insider, he told them every CEO in the Silicon Valley has looked at what Elon Musk has done at Twitter and has asked themselves, do they need to unleash their own Elon within them? Amazing the impact of Twitter on all the industry. So that's Salesforce, and the market loved it, and the stock went up 16%. Citi cuts jobs in their investment banks and mortgage departments. Mark Zuckerberg announcing that the Quest 2 is getting a $429 discount, mainly because people are not buying it. This is their VR headset. And Dan Loeb, an activist, is taking a passive stake at AMD. It's not going to move anything in the management because it's a passive, it's not an active. But still, it's interesting to know that he's opening a new position on AMD on the long side, not on the short side. And GitLab, ticker GTLB, is raising their prices, and the stock loved it, went up 16% the day of the announcement. Those were all the headlines. And now, let's talk about next week. Or actually, if we talk about next week, we need to talk about the next 3 weeks. The reason why we need to talk about the next 3 weeks is because we can start with the end in mind. March 22nd, FOMC meets. FOMC are the Fed officials that are going to decide the pace and the rates going forward. The market currently has 75 basis points. At least most of the people think that it's baked already in the markets. 25, 25, 25. The big question is, are they going to get to March 22nd with an idea in mind to go higher and maybe for longer? Why should we start with the end in mind? Because Powell, March 7th and 8th, is going to testify in the Capitol. March 10th, we're going to get the jobs reports. That's Friday, jobs. Wednesday is job openings. So March 8th, we're going to see the JOLTS, the job openings. And March 14th, we're going to see the CPI. The Fed officials that are saying that they're data dependent are going to look at all these pieces of data, adding PCE that we saw a week or 2 weeks ago, combining everything together and taking a decision. Are they going to keep hiking rates? Are they going to stop hiking rates? Are they going to make any agreement to anything that's going on there? Everything connects to one another. That's going to happen in the next few weeks. And if we're talking about the labor market, which is going to be front and center this week, we do see signs of cooling in the market. Would be very interesting to see in the data. These are the companies that are reporting this week. I marked a few that I'm interested to hear from, but of course you can grab your own around. So Monday, there isn't someone that's really interesting to me. Tuesday, it would be great to hear from Dix. And of course, Tuesday after the close, we're going to hear from CrowdStrike. This is the high multiple cyber company, and it would be interesting to hear if or how they see the enterprises dealing with cybercrime. Wednesday, we're going to hear from Asana and MongoDB. That's after the close. And Thursday, before the openings, we're going to hear from JD.com and BJ's. And after the close, Alta, DocuSign, which is the crown stock for lockdowns and now hammered very, very hard. And Gap, of course. Those are the companies reporting next week. And we can't end without this. This is the S&P 500. This is the chart of the S&P 500. We've followed it week by week. As you all remember, let me hide everything here. As you all remembered, we were in a wedge. We had highs that were going lower, which means lower highs. We had lows that were going higher, which means higher lows. And we were at a point where a decision needed to be taken. We added two arrows. One was green, one was red. Are we going to drop or are we going to climb? We climbed, which is a good sign. And now we came back testing that trend line, whether it's connecting the highs this way or connecting highs another way, it doesn't matter. When we add the 200-day moving average, it takes an average is 200 days. It's an automatic trend line. We see that as of Thursday, or actually Wednesday, we bounced on the 200-day moving average and started moving up on, I'm only looking at the S&P 500 index. Does that mean that the lows are in from October and we're not going to test them? Does that mean we're not going to test the December lows? I don't know. What I do know is that we ended Friday on a green note, not only for the week, but also we ended above 4,000, which is a psychological number for the market. Dropping underneath 4,000 would initiate a lot of selling, automatic quant selling, or dropping underneath the 200-day moving average, or closing actually underneath the 200-day moving average would create that pressure on the market. We didn't achieve that. So that's good on the long side. If you're short, then you're probably not that happy. If you're long and you have equities and you have a portfolio, you might be encouraged by that. And of course, we will follow everything that happened in the market. We will be here next week summarizing the week on a weekly recap. If you enjoyed and you heard this all the way here and you haven't smashed that like button, what are you waiting for? Smash it. It's free. Till next time, till next week, I'm Micha Stocks from Stock Talk with Micha Stocks. Bye-bye.